We'll be talking technicals with Jim Wyckoff coming up. Happy Tuesday, Jim. Thanks for being with me.
Good morning, Daniela. Good to see you again.
Good to see you as well, Jim. And as we speak, gold prices definitely firmer. What's happening on the gold front?
Well, this morning, Daniela, we're seeing a little bit of short covering and bargain hunting here from the recent selling pressure. I'm reading a few news accounts from some analysts that they're worried that we're in some kind of the start of a fresh, solid downtrend. But my work suggests to me that this is nothing more than a downside correction in an overall bull trend on a longer term basis. If you look back at in recent months, we've seen these type of pullbacks before, and right now it's nothing new, nothing surprising, nothing to get alarmed about.
Jim, what are those reports saying that they're concerned because?
Well, I think the reports that I've read, and I can't remember who said it, but they're just worried that gold could get down to $1,500 based upon recent technical price action. I just don't see that.
So, Jim, before we look at Europe and LME week in London, we can't ignore the big event that's taking place tonight, the second round of the presidential debate. Could this in any way impact gold prices? Well,
Daniela, I think if Obama stumbles again, as he was perceived to have done during the last debate, I think that might be the markets might react to that a little bit. My take is that we're probably going to see a draw tonight, and I think the marketplace probably won't react much. But I guess the surprise would be if President Obama stumbles, and that would probably be stock market bullish. Maybe slightly bearish for the gold market, but not by much, I would guess.
Jim, we also saw better than expected numbers coming from Citigroup today. Has this had any impact on the precious metals?
Probably not, Daniela, because the recent spate of better than expected U.S. economic data has actually lent some downside pressure on the gold market because it leads to notions that maybe the Federal Reserve is going to shut the spigot on quantitative easing. As I said yesterday in my AM report, I think that's a bit premature to suppose that, but nonetheless, the market's reacting to it.
Jim, if we cross the pond now over to London, it is LME week, where the London Metals Exchange holds a series of meetings. Are you hearing any news or reports coming out of there yet?
I'm reading a few headlines coming out of there, Daniela. Nothing that is earth-shaking or market sensitive. In the past years, I think maybe metals trading has been a bit quieter because some of the major players might be away from their desks. But I haven't heard anything, super market shaking coming out of there.
Still in Europe, Jim, European economic data that was issued last night showing that inflation, Eurozone inflation, was unchanged in September. Are we not seeing a glimmer of hope emerge yet there?
No, that's just, that really wasn't too market sensitive. I think the bigger thing that the European traders and investors are looking at is whether Spain is going to formally ask for a bailout. Looks like they might be leaning a little more in that direction. And if they do, that is going to open the door for the European Central Bank to provide some bond buying authority. And that's kind of what the marketplace is looking for to kick off some fresh stimulus from a monetary point.
Jim, it's now time for your Wyckoff market rating system. What grade are you giving gold and silver this week?
Well, I backed off a little bit on both. We've seen this downside price pressure. We haven't done any serious near-term chart damage. The bears have gained a bit of fresh near-term technical momentum, and therefore I've lowered my Wyckoff market rating on gold to 6.5. Still an overall bullish reading, just down from what it was recently. The major near-term technical points I'm looking at is overhead resistance at 1775, solid support at 1720, and that's basis December COMEX gold. Now for silver, I've got a Wyckoff's market rating of 6, which is still leaning toward the bullish side. We hit a new 4-week low in both gold and silver just this week. In silver, I see solid overhead resistance at 34.38. solid support at 32, and that's basis the December COMEX futures.
So about 1 grade point less than you gave the metals last week, Jim. So again, just to recap, key numbers, 1775 for gold, 34.38 for silver on the upside.
Right, on the upside, and then on the downside, 1720 and 32.
All right, Jim, as always, good thoughts from you this week. Final thoughts for investors.
Well, I guess I just want to reiterate that the longer term price trend in gold remains up. Would not surprise me. Might be going out on a little bit of a limb here for me being a conservative analyst, but not going to surprise me if in 2013 we see new all-time highs in the gold market.
Definitely exciting times lie ahead, Jim. And just on another note, I look forward to seeing you live next week. You will be at the New Orleans Investment Conference. You are a speaker there. So I invite all our viewers who love Jim Wyckoff to come out and meet you in person, right, Jim?
Right. That's I believe it's next Wednesday night, October 24th, I believe. And I encourage anybody that's in the area to come on down.
And there are just a great lineup of speakers, Jim, from Sarah Palin to Krauthammer to James Carville to Doug Casey to Dennis Garman to of course, you. So I invite all our viewers to register at the link below. Thanks, Jim.
Thank you, Danielle. I'm looking forward to next time.
And thanks for watching this edition of Technically Speaking. You can email me, as always, at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.